The Vox Markets Podcast with Justin Waite. Nothing in this podcast is intended as investment advice, and the people in this podcast may hold positions in the stocks they talk about. Do not buy anything based solely on a tip or recommendation. Please do your own research.
Welcome to the podcast on Tuesday, the 26th of January 2021. On the podcast today, Neill Ricketts, CEO of Versarien, discusses some of the financial and operational highlights from the interim results. Also on the podcast, Vadim Alexandre, Head of Healthcare at SP Angel, discusses COVID-19 testing stocks and also quickly mentions tissue Regenix. Plus, Glen Goodman, former ITV News Business correspondent, now the author of The Crypto Trader, talks about his trade in GameStop, diversification, and this week's moves in Bitcoin and Ethereum. Also, I read out an email to him which criticises our banter, our chat. It's quite funny, I think. Thanks, Paul, for that. Also on the podcast, at the end of the podcast, I have two lists for you. The top 5 most followed companies on Vox Markets in the last 24 hours, and the top 5 most read RNSs too. Check that out at voxmarkets.co.uk. You'll see other bits of news, U-Group beats FY20 expectations and upgrades outlook for FY21. That's full year. Alter strategies, also our COVID-19 index. Biggest rise of the day, Gfinity, up 21%. In fact, it's coming back a bit. It was up 25% to 5.9 pence. I first covered those on video at 1.8 pence, up 230% since I covered them last back in the summer, I think. And also, biggest fall of the day is Dev Clever Holdings, down 8.7% to 18.1 pence. Check that out at voxmarkets.co.uk.
Vox Markets is an online community of investors that runs a free mobile and desktop platform that allows you to track news and updates about any UK-listed company, offering RNS push notifications, detailed charts, pricing data, and much more. Find out more at voxmarkets.co.uk/app.
And joining me on the podcast right now is Neill Ricketts, CEO of Versarien. VRS is ticker. Neill, thanks for joining me.
Good morning, Justin. Always a pleasure, as you know.
Yeah, and you released your interim results for 6 months, ended the 30th of September. We'll dig into that. But as always, Neill, if someone's tuning in and have never heard of Versarien, could you just explain what you're about, please?
Sure, Justin. I mean, so we're a listed company on AIM that are looking at the exploitation of graphene as part of our advanced engineering and manufacturing group. Obviously, the main highlight, as I've said, is the development of graphene, and that's brought up several times in our interim results, which we'll talk about next.
Yeah. Okay. Well, let's dig into the financial highlights first of all. So, took my top line, dropped the revenue 3.12 to 4.38 million. What was the reason for the drop in the top line there, Neill?
I mean, we've been through a hell of a year, as everybody knows, not just the company, the whole country. And the drop in revenue is predominantly down to some of the kind of slowdown in the big industries like oil and gas and automotive in our more traditional businesses. Obviously, we've seen quite a lot of development in our materials business, developing these things like graphene. But the sales were down as expected. We've had some sheltered workers also that we had to furlough for their own safety, which reduces our capacity. But predominantly just a slowdown in the economy.
Yeah. And do you think has that changed a little bit since? I mean, it was stopping and starting all the time. The economy, of course, around the world, the lockdowns, but. I mean, like I said, do you think that's a temporary blip and it'll get back to normal soon?
Well, it's, looking at the macro events, as you say, just as we release lockdowns in certain places, then it starts to speed up, and in other places it's slowing down. Our view is that it's very much an interconnected world these days, and we have to protect the supply chain. We have a lot of materials coming in from China, but the Far East has been far less affected by these events than we are in the West. And so we've had a lot of activity more recently in Japan, South Korea, China, and obviously there are opportunities out there as well as some big problems in terms of our traditional businesses.
Yeah. And looking at the graphene and graphene product sales, it's obviously in its infancy, graphene, so it's a low base, but it's decent expansion there. You've gone from 70,000 to 350,000 there. So what's that from? What's the expansion there from?
Well, the expansion is as we start to commercialize this technology, we start to work with these big global companies. Unfortunately, businesses or technology businesses especially don't go from A to B in a straight line. So we do get peaks and troughs as people buy materials in different quantities for testing. And we're still very much in that testing stage as we start this journey of commercialization. Mm-hmm. Now, the jump from 70,000 to 350,000 is a big jump in terms of if you were to plot this as a graph. And what we've got to do now, the management team is focused on continuing that growth of graphene products and graphene itself along the same trajectory. So things, they always start slowly and then, they build up. But what you can see in these results is that as opposed to doing things that other companies would do sequentially, one after the other, we're doing a lot of projects simultaneously. Some of those projects are quicker wins, they're smaller projects. Some of them are much bigger projects, which will take time. And what we always strive to do is to have a portfolio of products across a vast range of sectors in order to overcome some of the challenges that we've seen this year. There are industries that have benefited from the quite tragic events that we've seen, PPE being one, for instance. So we launched a product very, very quickly with our Chinese partners. But there are other areas in which graphene can help kind of stem the advance of this really quite nasty disease that we're seeing through society.
Mm-hmm. And that you launched on a graphene sort of infused mask, PPE there. And does the sales does that contribute to that figure there, that increase? It
does, yeah. These are graphene and products that contain graphene. And just before Christmas, we launched our first textile product. And this is what we're going to start to see is as these sectors become bigger. We'll start off with PPE, then textiles, which are quite interlinked. We've got stuff going on antiviral. We've got stuff going on concrete. We've got stuff going on carbon fiber. We've got stuff going on in tires. We've got stuff going on in thermoplastics. Things like packaging. And they all move at different rates, and they're being trialed by lots of different types of companies, big companies like Airbus and Rolls-Royce, down to smaller companies that we work with because they're very agile. Yeah.
And so cash at the end of 30 September at 2.5 million. The loss was pretty much, just a bit over double last time round. Why was that, Neill? Why did that go up a bit there?
So, I always concentrate on the EBITDA or the LBITDA, and I'm not sure how many kind of non-accountants understand these terms, but that's when you strip back all the things that are kind of exceptional. And that's a true figure that we should be looking at. In the loss before tax, there's a lot of accountancy rules and things in there that can actually kind of move that away from what is actually really happening. Skew it, that's the word. Thank you, Justin. Skew. I was thinking of my statistics lessons then. Yeah. So if you were to break down that 4.34 million reported loss before tax, you would see things like adjustments because of the Landsted agreement, which isn't a traditional kind of vanilla equity placing. Yeah. It's a financial tool, has to be revalued at every period. You'll see things like non-cash movements for the share schemes that we have in place in order to remunerate our executives and our key staff. And so that 4.34 is not all cash movements. We also have one-off things like acquisition costs and aborted acquisitions and things like that you'll only ever see you should only ever see once they're done. So you kind of need to take the figures apart, really.
Okay. And operationally, give us some highlights from the operations this year then, or the half, if you could, Neill.
Well, we're starting to see, it was a hell of a year, as we've talked about, but in that year we've done, we started the year with a large European project, which is looking at graphene in de-icing systems, predominantly in carbon fiber structures for Airbus. We've seen a project kick off with Rolls-Royce around the latest developments in aircraft technology and engines. We've seen the commencement of a variety of other projects, including one with the Advanced Propulsion Centre, which is all about automotive. It's all about getting graphene, and we're supported there And that's not about cash necessarily. That's about getting the right contacts and preparing yourself to get involved in that industry. And then, we've seen, a strengthening of our governance as well in terms of having our advisory panel, but also, bringing on board our non-exec chairman, and also more recently, promoting our head of research, Steve Hodge, into our CTO position. So lots going on, and a very busy year for us, to be honest.
Yeah. And looking forward then, I mean, I suppose you know what you want to achieve, but how constrained are you by what's happening at the moment, or can you see a clear line of sight to, improved operating and financial sort of, goals?
I think it's causing a bit of noise in terms of our traditional businesses, as we've talked about. There's nothing significant there. Sales are down slightly. But if you look at our development businesses, we're recruiting, we're seeing more and more opportunities for projects. I failed to mention that, we were awarded the £5 million Innovate loan, of which we've already received the 1.96 million. And also the contract with DSTL, which was a £1.95 million contract as well. So in terms of opportunities for us, I think our opportunities are exponentially growing. We're seeing a firm foundation in independent testing, some quite remarkable increases in, say, concrete, 40% improvement in the compressive strength. This means that we can radically reduce the amount of concrete. And I don't know if you know, but concrete is one of, if not the biggest contributor to CO2 in the atmosphere. So, these are big problems for society that we're seeing being taken on by this brand new science.
Yeah, absolutely. Marvellous stuff. Okay, Neill, well, as always, if someone's listening right now or likes the sound of the progress you're making there but are not yet following the story, give them those 3 quick reasons why they should hit that follow button on your page on Vox Markets and add you to their watch list, please. Okay,
so the first reason I always look at as a substantial investor myself is, what connections and contacts have the business got? And in this case, we're dealing with the University of Manchester, the University of Cambridge, and almost all of the leading universities in the UK. Mm-hmm. The second thing is about the support that we get from the UK government in terms of not only the Department of Business, but also in terms of Department of International Trade, and obviously the MOD in terms of the contract that we've been awarded. And the third thing is, how substantial, as Stephen Fry said, will this technology be and the impact on our lives? And we are now starting to see the wide range of applications that graphene can really affect our lives.
Yeah, absolutely. Marvellous stuff. Neill, good to chat to you as always, and hopefully we'll catch up in the not-too-distant future. Thank you very much.
Thanks, Justin.
The Vox Markets Podcast with Justin Waite.
And joining me on the podcast right now is Vadim Alexandre, Head of Healthcare at SP Angel. Vadim.
How are you doing, Justin?
Good. You're ahead of the curve, suggesting there's oximeters. Is it oximeter or oximeters?
Yeah. Pulse oximeters, that's correct.
Yeah, we have one here because my son's got a lung condition, so we check his. Basically, it's a little device, but you can buy them. Obviously, it ranges in prices, but they start quite cheap, don't they? 10, 20 quid. But you put them on your index finger, it monitors the oxygen in the blood, I think, doesn't it?
Correct, exactly.
Yeah. And go on.
They're readily available, exactly. That's the point. You can get them on Amazon for 10 to 20 quid.
Yeah, so you talked about the backstory. You talked about this last week because you had COVID, and you said you can tell pretty much it's worth keeping an eye on this because if your oxygen levels are dropping, that's a surefire sign something's happening there, and it could be COVID. And so, and yet, a week after you mentioned it, the BBC came out saying, the NHS came out, said they're now supplying these things, or you can buy them, or suggesting you buy them because for the same reason. Yeah, cool.
Correct. So it is, look, it's like a blood pressure, having a blood pressure monitor. Many people have them in their homes. A pulse oximeter, it's the same thing. It's super cheap, and it's very important in this context. If someone has COVID, and most people have COVID and it subsides and that's it. And that's perfect. That's what we all want. But it's good to have this if you have COVID at home. You just want to know that your blood oxygen isn't dropping. And for something that's so easy to have in your house, isn't expensive, given where we are in this crisis, it's a no-brainer as far as I'm concerned. You have your pulse oximeter. If you catch COVID, or don't get one until you start getting symptoms, because you can get one in 2 or 3 days. get one whenever you want, have one in your house. It doesn't really matter. My point is I got mine when I caught COVID. I didn't, probably best to have one ahead of that in case. But anyways, my ultimate point is if you have COVID, most likely nothing's going to happen to you and everything will be fine. But it'll reassure you because you know that your blood oxygen is doing fine the whole time. If there's a problem with your blood oxygen, you'll be happy you had your pulse oximeter.
Yeah. Okay. And talking about diagnostics in the COVID space, let's talk about some of these testing companies. There are quite a few of them around now listed. In fact, when we started talking, there's the main ones we sort of focused on was Novacyte, which is the one that's got, it's done so well. But listing recently was Source Bio. They're doing very well, actually. And, of course, it's not their only part of the business. They've got other things going on. In fact, they have the ability to store, I think, vaccines and drugs at minus 70, 80. That's part of their business. So they've done very well. And, of course, there's Abingdon Health, who's listed, which is our partner, I suppose, with Amiga Diagnostics. So lots going on there. What's your thoughts in the space?
Yeah, I think the view on the space is the most important here, right? So remember, you and I, many times we discussed timing of events and, what's important. And obviously vaccine rollout will have an impact at some level, right? So to me, it's always been about peak testing. When will that, subside? And and most importantly, what the new normal will be afterwards, right? The new normal level. So, fundamentally, I believe that the new normal will be a higher level of testing than prior to COVID, and respiratory diseases will be tested for regularly. And we do need to, take into a consideration new variants and COVID being with us maybe for a very long time, but under different circumstances, far less lethal, controlled with future vaccines. But all that will require a new normal of higher testing, right? Mm-hmm. So I think that bodes well for all testing companies. The peak, however, will subside, and the question is when. And we've had many discussions about that. It's a lot of it is guesswork. Will it subside in 6 months' time? Will it subside in a year's time? Something like that is, as far as I'm concerned, is it's going to happen at somewhere in that time frame. Okay, because vaccines will kick in. This peak will drop, and then we'll start to find that new normal somewhere in 21, 22, Now, remember that you and I chatted, I think the last time we discussed this, is there a threat that vaccines kick in and it's all over, right? And then, all these diagnostics companies are then caught off guard. There is a risk of that. I'd say it's maybe a bit more of a tail risk for someone like Novacyte, but a bigger risk for, the companies that don't have products in the market that are still in development stage. So the question is, with respect to share prices, I think we'll probably see them do well for another, few months. But there is a danger that when all this vaccination kicks in, this is what we've always said, and you've said so yourself too, Justin, is when will that moment come where the trend is against you for diagnostics companies? Well, it's taken a bit longer than I think expected, just as COVID's taken a bit longer than everybody expected. So there's a good chance that it'll all take a bit longer than everybody expects, right? So I think diagnostics are going to be fine for a little bit. Certainly the established players like Novacyte. I think it gets risky with the smaller ones. But then if you consider the after COVID spike new normal, you'll probably find a market for them that's sustainable, right? So you'll have this turbulent stage in the next 6 months of them coming off, the COVID spike, trend ending, as in the actual COVID, right? The one we're living right now. It's bound to come to an end, and as we come out of it, I think that's diagnostics negative, but then the new normal is diagnostics positive, right? So as I've always said, I think the bigger players are more robust, and those are the ones to stick with. The smaller ones are a bit riskier.
Yeah, my thoughts is this, and that I missed out on these. I probably wouldn't have gone in anyway, because when I look at a company, one of the things I look at is the trend and how long is it strong for. Is it a strong trend? Will it be here for like 3-5 years? And so, and the stock market looks ahead, and that's why the stock market is rallying now. even when the economy is shot, because they're looking ahead to the economy opening back up, and we may have a pullback a bit later. And the stock market always overshoots, because one way oversells, overbuys, and so when you're looking at this, they may have a decent business, for the next 12 months, but if it's only 12 months, and if you think it's not going to get stronger after 12 months, it's going to get weaker. That's going to be start to be priced in right about now or within a couple of months' time, because that's how far the stock market looks. Unless you've got, price of, unless you can see the revenue and the profits coming in at a greater level in 12 months or more time, then the trend is down. The sentiment's going to be down. That's it. So you could argue it's probably some people who hold these companies said, no, I think they're going to earn more after 12 months. It's going to build up. If that's the case, fair enough. But that's what you got to look at. I think you look at 12 months out. That's it. In a full stop. What's going to be in 12 months?
I completely agree with you. And I think yes, markets are forward looking. Where I think there's difficulty, and it's really difficult actually, is so the smaller the company, the more pre-revenue or the smaller the revenues, the more volatile. It will be. So a company like Novocyte is cashing in. The cash, is as always discussed. They were ahead of the curve, so the cash is in bank and continues to be so. Okay, so parking Novocyte for a second, let's talk about the smaller players. So we all acknowledge that volatility will be higher in the smaller players. What I think is going to happen is that 12-month view is that the biggest turbulence right now is what is it? When will the spike in COVID cases end? And, when will that spill over into vaccines taking effect and testing being reduced? Okay. That is where I think it's hard to predict. And I think some may see some re-ratings downwards because maybe that new normal testing level is, people are assuming it's much higher than it is because of the current spike in COVID. You see what I mean? Yeah. So I think the next 6 months are going to be turbulent in those smaller stocks. But then the longer term view is once that re-rating, whichever way, there might be some further rallies and then big re-ratings downwards. But once COVID gets handled, I think then that's the new normal is smaller than what we're experiencing today. And that might that might be punishing for some share prices. But there is a new normal for testing afterwards. These new variants, new vaccines will have to come out in the future, et cetera, et cetera. So all that will require testing, but not at current levels, right? No government on earth can afford continuing testing at current levels indefinitely, right? So that's why I think in the next 6 months we'll see some serious turbulence in some of the smaller COVID testing stocks. But for those that can kind of weather that, there is a new normal of higher testing. So that they will find their place in the market if they can weather the next 12 months, let's say.
Yeah, cool. And in the meantime, looking at the trends, but med tech, it's very, it's not going away, is it? Of course, tech and medical diagnosis is linked, isn't it, in every way? And the thing is, what struck me the other day is that, we've seen these new variants come out. And that's not unusual in viruses, of course. And I realise we've had this coronavirus now for over a year. And so, with the flu, you have to have a new vaccine every year because it's morphed, little iterations of it. But by the time 12 months gone by, it's changed enough to warrant a new vaccine. And so that's where we are with coronavirus. We've had it a year and it's mutated enough, or little iterations, so much that it's changed to the point where we're going to start to need new vaccines, aren't we? It's just a whole new industry every year,
Absolutely. I think, there's a chance we might not, but it's highly probable. And what's caused this is the fact that it's become a pandemic, that it's everywhere. So because the virus has spread so widely, it's now very difficult to extinguish completely. Do you see what I mean? So, and as we've seen, the variants are emerging all over the place. So, there's talk now of a Los Angeles-based new variant as well, which is why Los Angeles was hit so hard recently. It's just we're going to see more and more variants emerging, and eventually one will escape vaccines. The available vaccines, maybe not entirely. So we might not have it. The vaccines will still help in terms, I think, and as personally, I think that the vaccines currently will continue to protect people, at least in the shape of taking the sting out of the disease, so making it less deadly, right?
Yeah.
So
They're saying the efficacy may go down because I mean Moderna said their vaccine if it's okay with the UK variant, it's still very effective. They're saying they think it's okay with the South African one, but less effective, but still above 50%. So again, you'd have to keep adjusting that. I think surely sooner or later, one company will come up with something that will, it's almost a fix. In fact, they do it now. They can re-alter vaccines pretty quickly, and regenerate. So, but will there be a time when there'll be a company that'll have some kind of development where they can literally, at the flick of a switch, change it, and as fast as the virus changes, they'll have a vaccine for it, or an all-encompassing vaccine that'll kill many iterations or mutations of the virus,
So just the Moderna and the BioNT, so the Moderna and the Pfizer vaccines are these new RNA-based vaccines, right? Mm-hmm. And the beauty of them is you've got everything established, you've got the whole rollout established, and all you need to do is change the sequence that you used. So you tweak it to the new variant, okay? Now, obviously, you still need to do clinical trials afterwards, but you can streamline the process, and it may very well be that we streamline the regulatory process accordingly as well, right? Mm-hmm. But the mechanics of it are relatively simple to tweak the vaccines, and that's why Moderna and Pfizer are saying it won't take us very long to upgrade our vaccines to new variants, right? But I think so yes, that is entirely probably I agree with you that we will have yearly vaccines or whatever it is to adjust for variants in time, and ultimately the big problem that we have is that the virus is so widely spread, like I was saying earlier, that we're going to get new variants coming out from different areas of the world and spreading, and we'll dampen them down with a new version of a vaccine in time. But the real long-term, I think, balance that'll be reached is that as we all get different vaccines over time or get vaccinated to begin with, and many of us get the actual virus, is that it takes the sting out of the death rate of the virus. The reason the virus is so deadly is because none of us have ever seen this virus and no one has been exposed to it. It's the first time, it's a brand new virus. It's, that's why it's so deadly. But if you get, either you get the virus and then later on you get a new variant, well, there's every reason to believe that it'll be less deadly. Do you see what I'm saying? Because you have some form of exposure either through a vaccination or through having had the virus, a previous variant. Mm-hmm. So in time, I don't see, in time, I see a new normal being reached where it is kind of like the flu. Yes, it's deadly to the tune of, say, in the US, I think the flu kills 30 to 60,000 people per year. Okay. But not to the tune of 400 to 600,000 people. That's because we're seeing this virus for the very first time. But the normal will eventually be reached. I don't know what levels it'll be brought down to. May become far less deadly after vaccination. But we all agree that it's unlikely that we're going to extinguish the virus. We're probably going to have new variants coming in the future, but that are far less deadly.
Okay. All right. Listen now. I want one word answer for you. Okay, from you, one word answer, and you can be nothing. But let me know. Have you recently bought a new company, invested in a new company they haven't talked about yet? Yes or no?
What have I bought lately?
Yes or no is the answer.
No, I haven't.
Okay.
I think the answer is no. I haven't bought. I'm kind of been stable in my portfolio.
Yeah. What's the last thing you invested in? What's the last thing you invested in? New company, not top up, but a new company. What's the last one you bought, do you think?
I think the last company I bought was Tissue Regenix.
Okay, cool.
Remember we talked about it? It was the one that they did a super discounted placing, and I thought that was really cheap. I didn't participate in the placing. I bought it not long afterwards because I couldn't get into the placing. But yeah, that company, I think we talked about it. But look, I'm happy to talk about that one. It's had a good rally actually today. This company, really what I like about it is I think it's going to be part of the echo once this COVID crisis moment passes. You know what I mean? Because it's involved in orthopedic products and other products like dental products, but basically orthopedic products or heart valves, things like that, things that are involved in routine surgeries that aren't taking place right now because of COVID. But that pent up demand there's gonna be an echo post the crisis because it's demand inelastic. You need to have those surgeries down the line at some point.
Yeah.
So tissue Regenix, I think, are going to benefit from that echo.
Marvelous
and
stuff.
I think they're underpriced as a result.
Yeah, cool. And ticker there is TRX. Cheers, fella, and we'll speak you next weeky.
Excellent. Thanks, Justin.
The Vox Markets Podcast with Justin Waite.
And joining me on the podcast right now is Glen Goodman. He is the crypto trader, and he's got a book to prove it. You're right, Glen?
Yeah.
What's happening with... in fact, before we get on, right, I've had an email come in from a guy who's quite supportive, but he's decided to criticise our podcast. So his name is Paul. He said, big fan of podcasts, all that stuff, and done very well.
Whatever.
Said, some of your podcasts are getting too long, and they actually don't need to be that long. Could be done half the time.
Well, that's because we just kind of talk about our lives.
And he said, this is actually shut up, Glenn. This is actually a turn off. Well, the thing is, Paul, these are called on-demand listening. You can turn off when you want. It's not.
This is actually a turn off.
Yeah, the long bit.
Am I turning him off?
Yeah. The length of this podcast. So, example, yesterday, 19th of January. This is very lots of detail. Paul, you've got too much time in your hands. Move on then. If it's too long, just move on. We've got another podcast.
I'd like to apologise to Paul for turning him off, and I'd like if he could email back and explain how I could turn him on.
Well, this is it.
I would be interested to know.
He's been very helpful here, Paul. He explains. Yesterday, 19th of January, always have time for Vadim Alexandre on pharmaceuticals because he's efficient. Polarian, COD, that's Cambridge Cognition, gives me 2-3 great idea reviews in 10 minutes. Then Glenn... I love Glenn's comments, in brackets, on Bitcoin, which is huge, but half of the chatter is a waste of time, in my humble opinion. The same story again, Glenn's book, Trading Bubbles, Arguable Investor are now broadly in Bitcoin, and there's no need to be discussing this regularly in so much length, and there are many other Bitcoin podcasts. This is just one example, there are others. Conclusion, in bold, in capitals, make your podcast more efficient, 30 to 35 minutes maximum, and you attract more listeners without losing them. This is just my personal observation, and it's meant to give constructive feedback. Best, Paul.
Maybe Paul's got a point. Maybe we do.
Right, Glenn, cheers. Thanks for that, fella. Thanks for that. Speak next week.
I mean, look, this is a perfect
No, that's enough now. Everyone's in Bitcoin.
Look, we're wasting everyone's time right now.
Everyone's in Bitcoin. Do you know what? Listen, Paul, I don't know why we had it the negative. I've had quite a few. I've never read them out because I don't want to blow smoke up your backside. But I've had quite a few saying, I like the banter you have, Glenn. I've had quite a few people. I've had quite a few people say,
you never told me that.
Yeah. So, but it's funny how I remember a friend of mine always said essentially. Oh, no, who said that? Someone said, if you're driving, if you buy say you've done well in life, you decided to treat yourself with a $100,000 car, right? And it's literally engineering and luxury perfect. It's got everything. And then you hear a little squeak. You focus on that squeak, non-stop. And it spoils your entire experience of the car, which is otherwise perfect. And you can't stop. And it's basically the squeaky always gets the grease. Or so the one that makes the noise against everything else gets the noise. But I've never.
What's your analogy here, though? That your podcast is great all the time, but I'm the squeak.
No, I'm not saying that. I'm talking about generally. I get emails saying thanks for this podcast all the time. I never read them out because it's big-headed. But then we tend to focus on the negative too much in life.
So that's what celebrities do, isn't it? All the time. That's why they get obsessed and very depressed about the one person who said they were fat when 100 people had written to them saying how beautiful they are.
So thank you for the feedback, Paul. But listener figure's doing very well, and I go by that because that's because your survey, your email is a survey of one, and essentially you can turn off. That's the thing about podcasts. It's on demand. People can turn off when they want. It's not like years ago. That's why podcasts flourish, Paul's obviously not a fan of Bitcoin. That's it. Paul's not a fan of Bitcoin. He's into stocks. So that's fine. Not everyone's in Bitcoin, Paul. Nowhere near investors are into Bitcoin. It's still a niche sort of investment, really.
Only they had been.
Yeah. And that's
if only they'd listened to me.
Yeah, but that's what I'm saying. So the difference between live radio and podcasts, and that's why they flourish, because it's niche subjects people can tune out of. You don't have to. It's like when you used to drive along to listen to radio, and and then the DJ would come on and get on your nerves. Do you want to listen to music? DJ, shut up, DJ. You didn't tune in for him. You tuned in for the music. You can switch channels, but then you won't get the music. But with podcasts, up to you. You can fast forward it, you can rewind it, you can stop it, you can flip to another podcast. So there we are.
Exactly.
Not everything is going to be.
I'm not even listening now.
Yeah, not everything is going to be tailor-made for Paul. It can't be. That's not the way they work. We can be niche to a certain extent, but we can't say, Paul, write everything down we should talk about, and that's it. We won't cover anything else. So there we are.
Okay, well,
anyway,
that's a pretty comprehensive answer to Paul.
Let's talk about your book, Trading and Bubbles, please, Glenn.
Our 3 favourite topics.
What's is your book selling?
Yes, it is, because everyone's talking about Bitcoin. That's how it works, isn't it?
Do you do any money out of it? Do you do it? I mean, it's good for your profile. Can you earn money out of a book like that? Quite niche investing?
If I'd self-published it, maybe.
Okay.
But, when you have a publishing deal, the publishers, it's just standard. Publishers take most of the money. And that's even after Amazon have taken a big chunk themselves. So, authors don't get left with much unless you're J.K. Rowling or something. It's hard to make sort of significant amounts of money. So, I went into this with my eyes open. So, I did it. Why did I do it? I did it because I was asked to and because I had a lot of knowledge I wanted to get out there, Yeah. So I just vomited out my knowledge of 20 years of trading, and I don't get much back from it, but I do. It creates a lot of work in a way because I get a lot of emails. I get emails every single day, which is nice because most of them are like thanks, we really love your book, blah blah blah. But they ask questions and I always answer the questions. I always answer emails. So basically the whole thing's a massive money losing exercise. But I enjoy it. I enjoy the lifestyle of receiving feedback for my book and then replying and giving people help and so on.
But the most important thing,
I'm like a volunteer, a community volunteer.
No, but hang on, you don't care about that. Listen, do you know what? I
like it.
Do you know what? I genuinely can't be bothered with comments on my. I get back to people because it's polite, but I find it a ball ache. I really do. I do a video on YouTube and I get lots of comments. The majority of them are very nice. In fact, 99. That's why I get back to them. I tend to ignore the rude ones, don't give any air and don't argue with them. But, what I understand, YouTube want that. They want interaction. They want to keep people on their site for as long as possible. So they want to create the kind of conversation. But I find that hard work. So, if you do I would never do a book then, to be honest, in investing, because I'm not going to make any money doing it. All it's going to create is a bit of work. I don't want that. What do I want that for? Sod that. No, the biggest thing about your book, Glenn, is that you've written a book. Everyone who to the average investor, private investor, or people listening in, most people haven't written a book. So the people who write books are knowledgeable and they're an authority. It places you above everyone else. That's why you write a book, because people believe what you say then. Because, I remember a guy criticised me recently because I talked too much with you. And he said, listen to the expert. And so people already assume you're an expert because you write a book. Yeah. No, but it's true, isn't it? If you write a book, people think, an expert is an expert. But no, but in actual fact, it's probably, a lot of people could write a book. It just takes time and effort and a lot of hard work. But it takes experience, of course, But and you formulate your ideas and write them down. But people believe... I got
an email the other day from Jerry in Australia.
Yeah.
Because some people in Australia buy my book as well. And his message just says, great book, write another one.
There we are. There's one person that will probably buy it. Well, you can't guarantee he'll buy it. He said he's a great book, write another one. He did say he'll buy the second one, but we hope he will.
I could waste
but get back to Harriman House.
Another one, and then Jerry won't even buy it.
Get back to Harriman House and says, listen, look, I've got a customer ready to go with the next book. One customer's queuing up. He hasn't said he'd buy it yet, but he said he's told me to write another one. I don't know if he'll read it. But
I actually wrote back to him asking what I should write about. Like, what's this second book going to be about then? And he's replied saying, blah, 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 blah. As for content for the next book, I do not have any particular requests other than to maintain your light-hearted writing style. Okay. I can continue with that.
Just do a lot shorter, a lot less words. No, just a couple of pages maybe. So the secret's in there somewhere. That's the way to do it.
I fear that we've been talking now for more than 10 minutes.
On the book, yeah, on the book. Let's go. So now, no. Now we move on to Paul's second thing, trading.
Trading, right? Okay, yeah.
So what have you done this week? You mentioned actually yesterday for some unfathomable reason.
Yeah.
A US stock, GameStop. Is it GameStop?
Yes, GameStop.
What do they do? But it went bananas, 125% in a couple of minutes or a couple of hours, and then it dropped. And I think it ended up 18% up, didn't it? So it dropped by a lot. But you held that, didn't you?
Yeah. Now this is where because we've talked a lot in the past about. You usually say, look, you don't need to have that many stocks. And I say, well, I've got too many stocks. And you say you should reduce the number because you only need a small number of high quality stocks. But there are times when owning a lot of stocks comes in useful. And this was one of those times.
But how much did you earn on that?
Because GameStop is just one of many stocks that I owned. I bought it in early 2020. When did I buy it? I bought it in late last year. And then since then, the price doubled, and then it doubled again, and then it doubled again. I mean, yeah, it's been in the news. GameStop has gone absolutely crazy. And basically, I woke up on Friday, or not woke up because I waited for the American market to open. On Friday, the American market opened, and I looked at my portfolio, and I thought there must be an error. Like maybe there'd been a stock split or a reverse stock split or something that my portfolio software hadn't accounted for, because it was like, where did all this profit come from? This didn't exist like 5 minutes ago. And it was GameStop. Basically, the price had gone insane through the roof. And suddenly I had a whole bunch of windfall profit that, frankly, I feel a bit guilty about, because it's like I didn't earn it. I didn't do anything to earn that. It just suddenly appeared because people went crazy about.
Did you really feel
this
guilty about
company,
it? Did you really feel guilty?
Well, not guilty.
Why?
Exactly. Just kind of like, oh, this isn't really mine. It kind
Give
of
it
felt
a charity then.
Way. Anyway, I sold the shares on Friday because they this is the annoying thing about some stock markets. They have these circuit breakers, so they kept suspending trading in GameStop because the price was going crazy, which is all very well, and it's supposed to make people calm down and stop buying and selling at such a great rate when they temporarily suspend trading for minutes or even hours. But what it did to me was the opposite. It made me very, very nervous that I wouldn't be able to sell these GameStop shares when I wanted to. Let's say they suspend trading because it's going crazy. I can't sell at a high price. And then when they reopen trading, the price has jumped down. It's halved or even worse. And, that kind of thing makes me very nervous. So I was anxious to get out of those shares. I sold them around about $65 on Friday. And then yesterday, Monday, the price went crazy again. The price doubled again after I'd sold them. So I was obviously a bit annoyed about that. But at the same time, the price shot up yesterday, Monday, and then shot straight down again. Currently here on Tuesday, they're only a bit higher than they were where I sold them. So, would I even have been able to get out yesterday at those high prices because they kept suspending trading? I don't know. Maybe I wouldn't have been. So that makes me feel a bit better about selling on Friday. What do you think I should have done with hindsight?
I don't know. Well, the thing is, listen, it took me a while to realise how many shares you should have in a portfolio if you want to make money. And I worked it out, did a spreadsheet. I thought, well, listen, and do you know what? In fact, bear with me 1 second. I'll get it up for you and I'll just explain quickly. Because you don't need more than 10, right? And if you want to make proper money. I'm not talking about leverage money and trading, I'm talking about investing.
And because I agree with you in general. I'm just saying that occasionally you get these big windfalls if you've got more shares. You're more likely to have a crazy event happen to one of your shares.
How much you put in though? I don't understand how much you put in. So if you're talking about, I don't know, it's got to be material to your portfolio, hasn't it? So look at this.
Well, it has. It was big enough to make a chunk to make it to be noticeable in my profits.
Yeah, so look at this.
But yeah, it's not, I haven't got rich off this one share, put it that way.
No, of course not, because if you own, I've got the spreadsheet up, if you own 100 shares, right, And one of those stocks does a 10-bagger, which is hard. They're very rare 10-baggers. They don't come along well, they do come along a couple of those a year. Quite a few stocks come along in 10. But to have one is quite rare, and it's a nice thing to have. I've had a few of them, But if you have 100 stocks and 10 bags, your portfolio, everything else being equal, has only got up 10%. You're thinking, well, that's a lot of work for 10%. I can get that in a fund. So you may as well check. If you want to have that many stocks, you may as well have a fund, because you can get it that in a fund pretty much. So you can halve that, say, down to 50 stocks, of course. 20% it'll go up if you get 10 out. So I'm thinking, okay, so you've got to weigh up the risk and reward here, because if you have 100 stocks and one drops by 100%, goes bust, you've only lost 1%.
Yeah,
so
100 is far too many.
Yeah. So what I'm saying is,
I've got like a few dozen. That's all.
Yeah. So I know, but what I'm saying is, right? I know, but well, all right. Well, what I'm saying is, risk and reward is linked. If you're scared and you don't want to lose anything, have 100 stocks, and if one goes bust, you lose 1%. That's all. But you only gain 10% if you get a 10-bagger. So I don't want that. So let's move down. Let's say you're at 30 stocks or 20. Let's say you're 20 stocks, which is close to what you got, right? And you get a 10-bagger. Your entire portfolio goes up by 50%. That's all right, but it's not game changing, is it? I don't want that. I want more of a reward in that. And of course, if one goes bust out of those 20 stocks, you've lost 5% overall. So, of course, you're insulated a lot as well. So
here's the counter argument for you, right? If I only had, say, 10, 12 stocks in total, I can guarantee you GameStop would not have been one of those stocks. So I would not have had what I've just had. By being less choosy in the stocks that I buy, I actually perversely ended up making a lot more money.
No, but you said that argument. By being less choosy, you're also picking crap. So some of the stocks will be going. Some of the stocks will be going down.
As well as high quality stocks, I was picking a few punts, and GameStop was a punt. The reason is, let me explain the fundamentals. GameStop is a company that, sells physical games in shops, like video games, right? Is that the future? Does anybody really believe that that's the future of gaming? No. Most people, including myself, even middle-aged people like me, are basically downloading our games now. Not many people are actually going into shops. You're not playing games, are you?
Are you playing games? You're not playing games.
Yeah, I'm a lifelong video game lover.
Are you?
I've just got a virtual reality headset, and it is amazing. Okay. I'm going to do that for the rest of my life. I might not be on the podcast anymore because I just want to be in a virtual world all the time.
No, I understand that. So it's a punt, yeah? But what I'm saying is then, again...
the reason it went up so much is the short squeeze. Sorry, I just need to explain. There were such a high proportion of the shares were being shorted by traders, mainly in America, right, that we had what's called a short squeeze, where basically people start buying the stock, and as it goes up, all those short sellers start losing money rapidly, and they have to close their short bets. And when they close their short bets, they're effectively buying back the shares that they had sold short previously. For a full explanation of short selling, go on the internet, or actually my book's got that explanation of short selling. But anyway, the point is, when loads of sellers are short and they're all betting on the price going down, if the price starts going up because some people are buying, that makes a lot of short sellers fall into a loss. They have to buy back the shares that they had sold short, which pushes the price up further, which then causes more short sellers to have to buy back shares, and the price goes up. And that's what happened to GameStop. The price went mental because it caused this snowballing effect of short sellers having to close their short bets.
Yeah. So it's not a good investment. So what I'm saying is, I wouldn't have actually even punted on that. I'd prefer put the money towards something I really believe in and spend a bit more time and effort, actually concentrating on fewer stocks that I believe in, and so I will go bigger on. So let's go down that. If you go down that diversification table, like for example, I'm more happy between 5 and 10 stocks, because if I own 5 stocks, one goes bust, they're all equally weighted. Obviously, I've lost 20% of my portfolio. But if I get a 10-bagger, that will 200% my portfolio go up. That's what I want. I want that kind of reward and that kind of risk for my portfolio. Otherwise, it's no point. I mean, I'm just flogging it. It's like I see a lot of people talking about, diversification. You need 20, 30 stocks. No, you don't. If you're going to have that, buy a fund and maybe play around with a couple of stocks, but a fund you can get into and it'll have 1,000 stocks in it, and it's cheaper. There's no point having 20, 30 stocks yourself and being an investor and you want to make a decent amount of money. You won't do it. You won't do it, honestly, unless you're leveraging up in some way. But that's all I'm saying. That's it.
All right.
Good night. Anything else that Paul wants us to talk about?
Bitcoin, of course, we haven't talked about that. And basically the situation is that it has been going sideways for the past week. There's not a lot to say. It's been a bit of a boring week, and boring means don't do anything. In my book, you just wait. So the price, which peaked at, about $42,000, is now down at this point in time to $32,000, which for any other, if that was a stock, that would be counted as a massive correction in the price. But for Bitcoin, if you look at it on a daily chart, it looks like little more than a blip at the moment. So as things stand, this still only counts as a minor correction. You can draw, as I have, a little triangle shape pattern, a little symmetrical triangle on the chart, which implies that, the next move could be up or down, but when you're already in an uptrend, the default assumption is that the next breakout will be an upward one. So we have to assume that it's more likely to go up than down next. As the diagonal line stands, we need to get above about $35,000 in order to sort of declare a breakout from that triangle pattern. And as I say, I'm just sitting on my hands. I've sold nearly all my cryptos near the top. The ones
you
that
are
still
a genius,
doing well,
Glenn.
Just be quiet. The only ones that are still doing really well and outperforming actually are the ones in the DeFi sector. We've talked about it before, decentralized finance, which many people believe is the future of lending and borrowing generally. It's a peer-to-peer kind of system of borrowing and lending money, and there are now many thousands of people using these various decentralized finance cryptocurrencies in order to make good returns on their savings. When I say good, I mean, 6% or more on people's savings, which is obviously a hell of a lot more than you get in the bank. But of course, there is much more risk of default and other things going wrong. So it's certainly not risk free.
Do you know what?
But anyway, those cryptos are still booming, is what I'm saying. Whereas everything else that follows Bitcoin is just consolidating at the moment.
Yeah, my cousin, who's nephew, he's 19. He's obviously getting into trading and all that stuff and crypto. And he just asked me about Ethereum. I said, listen, it seems good. Ethereum seems to want the back, to be honest, and maybe Polkadot. But right up here at this level with lack of oxygen, I don't know. It's like, and I said that. He said, "You sure?" And this was like on the 20th of January. And the next day it dropped by 20%. He must have thought I was a genius. But since then, it's gone sort of back up to 1,400, close to that. So, but I think. Yeah,
this is why I'm out of it. Oh, yeah, Ethereum hit. Sorry, I should have said it hit an all-time high.
Yeah.
Was it yesterday or the day before? It was the day before. And I owned it at the time. I've since sold it, but I have to say this is a really tricky one, right? Because Bitcoin is in this kind of little downward trend at the moment, this little consolidation, and it's dragging everything else down. So Ethereum, even though clearly the direction of travel is upwards for Ethereum at the moment, every time Bitcoin has a bit of a fall, it kind of drags Ethereum down with it. So it's Ethereum is not exactly racing away. It's making it quite difficult to stay in. That's why I got out of it, because I'm worried that if Bitcoin falls heavily, then Ethereum will be dragged right down.
Can I say, Glenn, do you know what I've done?
I'd like to get back into Ethereum if I see a decent sort of breakout or something like that. Go on.
I've managed to reactivate my Coinbase Pro. For some reason, I couldn't get into it, and I had to get authenticator up and all that stuff, and it became a bit of a ball ache. I tried to hold my driving license to my computer screen camera to get it activated. Didn't happen. And then I read something, you can reactivate by putting in your special key. I thought, hang on, I've got that somewhere. I don't know where that is. But it's a special key, and I reactivated. But now I've got chart alerts. I'm not going to bother with that at all until I see on the RSI Bitcoin or Ethereum coming down to like 40, and then I know it's cooled off a little bit, and then maybe I'll accumulate a little bit there. But chasing the price is the surefire way to not make money in any investing, I think. So I'm not going to chase it, but it's cooling down.
Wise words.
Bitcoin, for example, it was up at a while back. It was up at 88 RSIs, it's not many prices last that long forever. It's basically like a burnout, it is lack of oxygen. After a while, it'll just fall over. And it did.
What's it at now, out of interest?
It's at 47.
Okay.
So it's coming down there, but it needs to go sideways probably a bit. I can't see Bitcoin dropping massively now. There's just too much support for it. There's too much institutional buyers up there. So maybe it'll consolidate for a bit. Now,
that's what's been happening. If you look at the chart, you can see that every time there's a massive drop over the past couple of weeks, buying comes in reasonably quickly and sort of props it up. So that's why when you look at the chart, you've got this, that's the significance of the symmetrical triangle that I'm talking about on the chart there, is that it basically means the fact that you're able to draw that triangle means that there is significant support. So it keeps the price constantly within the boundaries of quite a small triangle. Now, if the price were to drop below that now, below its previous low, the previous low was about $28,000, which it reached about 5 days ago. If the price drops below that, I'll start to get a little bit more worried. But even so, it would take a really savage drop to sort of get out of this trading range that we're in here. At the moment, I don't know. I agree with you. I think it looks like it's consolidating. There's a lot of support every time it makes a new low. I'm not too worried. I think the next move will probably be upwards. I may be eating my words, but I think the next big move will probably be upwards, and so I'm looking to get back in.
Yeah. But like you said, back on the things there, Bitcoin is the one rolling over first. The others may follow, but Ethereum still quite strong there. RSI is at 60, whereas Bitcoin is 47. So it's that's still, I think people are sort of catching on to even the wider sort of investor public that Ethereum may be the future and Bitcoin just a store of value. Maybe, I don't know.
Ethereum is the future because of the decentralized finance thing. A lot of those decentralized finance apps are based upon the Ethereum blockchain, so they sort of rely on it to some degree. It's not, though. Having said that, Ethereum is not necessary in many cases. There are other blockchain platforms that can be used instead of Ethereum to base these decentralized finance apps on. So Ethereum, is replaceable in that sense, but at the moment it's the market leader in DeFi platforms, and so it continues to go from strength to strength.
Thank you, Glenn. That's good. I think that was excellent. So, Paul,
was that a good summary?
Paul, I hope you take that in. I hope Paul takes us in the way it was meant. It was a bit of a joke, but we did that in half the time. Oh no, we didn't. Sorry. That was the same time. Apologise. Paul, ideal. This is why podcasts are good. It's actually times 2. You can put that on your podcast. You can actually times 2 button, and it speeds up the podcast twice as fast. So you yourself are in control. You can make this podcast with Glenn half the length if you want. See, perfect.
Could you put in a warning then at the beginning of the? Could you insert one when you put this podcast out? Put in a warning at the beginning of the podcast saying, Paul, if you're listening, please fast forward the first 10 minutes because it will just annoy you.
Not for first
Maybe
10
something
minutes,
like that.
That's first 10 minutes. Just to put it on 2 times 2. You can listen. No, his argument was he wants to listen to lots of podcasts and ours a bit too long. So I suggest you put it on time 2 and he listen to twice as many podcasts. You can do that. There's a setting on podcasts. You can listen to 2 times the speed.
Can you hear it properly at times?
Yeah. Surprising. Yeah, I used to do it sometimes. Yeah, cool. Marvellous stuff. If I speak very fast, it'll be very hard to understand because obviously it'll be fast anyway.
You need quite a deep voice.
I've got to go. I've got to
sounds too high.
Yeah, I've got to go. Glenn, thanks very much. That's brilliant.
All right. Okay,
Paul loved that. Paul loved that. That's exactly what he wanted. Cheers.
Bye then.
Bye-bye. Okay, it's time for the top 5 most followed companies on Vox Markets in the last 24 hours. They are at 5. Amiga Diagnostics down 4.5% to 74.5. At 4, Ridgecrest down 5.7% to 3.3. At 3, GS Technologies up 105% to 0.875. At 2, Zoetic International. I think that's thanks to John Story coming on the podcast. They're chatting about those. Quite bullish on those. 7.65%. It's up 91.5 pence. And at 1, Abingdon Health. It's up 7.14% to 127.5. Okay, top 5 most read RNSs are as follows. At 5, it's Rolls-Royce trading update. At 4, Abingdon Health trading update. At 3, Remote Modern Systems, RMS, exercise of options, really. At 2, it's Tizion Life Sciences, update corporate presentation. And at 1, it's Amiga Diagnostics, update read the ABC-19 rapid test. That's it for the podcast. In fact, there's two there. I thought it was the same one. Lab Best COVID-19 Antibody Test Service Launch. 2 RNSs there from Omega. So that's it for the podcast. Thanks for listening. Muchos apreciados.
The Vox Markets Podcast with Justin Waite. Nothing in this podcast is intended as investment advice, and the people in this podcast may hold positions in the stocks they talk about. Do not buy anything based solely on a tip or recommendation. Please do your own research.